All right. Welcome to Shelf Help. Today we're speaking with Douglas Raggio, who's joining us from NYC. Back in 2019, Douglas founded Pass the Honey, a single serve regenerative honey brand, after learning that 70% of honey is adulterated, in other words, a fraud, which we'll get into here shortly. And before launching Pass the Honey, Douglas spent about a decade on the investor side of the table, reviewing over 12,000 companies and deals. He founded Gastronome Ventures, a fund focused on food and beverage, as well as an advisory firm that works with PE groups and other investors to turn around troubled food and beverage acquisitions. And Douglas is also a published author, and he wrote a book called So You Want to Start a Food or Beverage Business? It's really a guide to help aspiring and early stage food and beverage founders navigate all the complexities of building in this space, which we're definitely going to dive into. So, yeah, with that, let's get into it. I think first off, just for the listeners, Douglas, that are not all that familiar with Pass the Honey, maybe just give us a quick lay of the land in terms of the origin story, the why behind the brand, the products you offer, and where the listeners can get their hands on them.
Well, thank you. Yeah, Pass the Honey, all we sell is pre-portioned, called individually portioned honeycomb. So it's a 3 centimeter cube of honeycomb in a package. Very similar to what you'd get at like a diner with your jellies or your jams. And the origin was that you mentioned earlier was that liquid honey is highly fraudulent. It's actually the third most fraudulent food on the planet. So olive oil is number one. Most people know that. Milk is number two globally. It's not such a concern in the US. Um, yeah, people add whitening agents to it globally.
Interesting.
And
Okay.
then if it's powdered for some reason, they'll also add other adulterations to it. But then honey, what they do is they cut it like drugs. They'll add, here's 1 barrel of clean honey and here's 25 barrels of rice syrup, and they'll blend them all together. They'll put it through filtration. So they'll muddy kind of the origin. They'll take the pollen out. And so you can't really tell source. And then you're just looking at sugars. Yeah, it's really difficult to test for. So when I was making honey lemon ginger teas just for immunity, kind of going through we had a really bad investor in a deal. And so I was, getting kind of run down. So I was making honey lemon ginger teas in the morning, like my grandma would make me. And the irony was here I was looking for nutritional benefits, and I was getting most likely processed syrups and sugars. And so I started using honeycomb, but traditionally honeycomb is in like a 14-ounce brick. And it's about $30, and it's not a one sitting item. And you don't leave it out on the counter because it attracts ants, and you don't put it in the fridge because it becomes an ice cube. And so it was just incredibly inefficient, and it was incredibly wasteful. And so the innovation was, what if we just cut this and put it in its individual portion, make it easy to use, make it convenient? Probably the best comparison is the baby carrot. The baby carrot came out, and all of a sudden carrot consumption, we're the convenience comb. They're the convenience carrot. And so we use that format change to introduce new customers to the category. So people that maybe don't know what honeycomb is are more willing to try it with an impulse price point that's under $10. They'll use it more frequently. They'll take it in a gym bag. They'll put it in, a backpack. They'll do it for themselves in an acai bowl in the morning or something. Like, it just doesn't require you to be hosting 8 people at your house to plow through a 14-ounce brick of honeycomb. It just opens up use occasions. And then again, it brings more customers to the category. And so that's really what we're doing, is we're having to educate the consumer on what honeycomb is. A lot of younger generations don't know what it is. We've just moved really far from our food sources. I mean, so bad, Adam, that like if we place Instagram ads or we participate in that platform, consumers will ask us, how do you get the honey in there? And it comes frequently enough to be concerned about our education system. And that was kind of the eye opening. It was like, wow, like we have an opportunity. It's a total challenge. Don't get me wrong, but the opportunity is to re-educate the consumer on not only, the fraud levels in honey, but also the role of pollinators in our food system. And telling that story in a honeycomb has a visual change. It's a pattern interrupt. Telling that story in a jar of liquid honey next to other liquid honeys is really difficult. It's not a task I care to take on. I'd rather have that like visual singularity that, oh, this is from the flowers, from the bees, cut from the hive. It's the closest thing to nature I've ever seen in the food store, grocery store. Why did I call it a food store? Yeah, so that's what we do. That's what we are. We have a full regenerative supply chain. We developed that standards and outcomes with UC Davis. We have a C3 with 1 million acres of research with the aim of bringing back our domestic beekeeping industry, because without a beekeeper, we lose honeybees, and without honeybees, we lose our food system. So giving beekeepers an alternative source of income to source and supply honeycomb while creating the consumer demand is, I think, the equalizer. And then you ask where they can find it. They can obviously find it at freshhoneycomb.com, but we don't do a lot of e-com. I prefer not to do e-com. But we're in most Albertsons banners, Albertsons, Vaughn's, Pavilion, Safeway, United Texas, Acme, getting more and more divisions through the Pacific Northwest, getting more and more divisions through the Intermountains. We're also in Fred Meyer King Supers, which are Kroger banners. And then we're launching 3 more Kroger banners in the next 3 months. Smith's, Houston, and I forget the third one. And then we're with ShopRite in Wakefern in the East. And then we are talking to a large natural retailer that has a southern footprint. So that, hopefully, fingers crossed, will happen mid-year, which I guess is...
Hey, you guys are distributed pretty widely. It's great. People can find it at a lot of places.
Well, mostly conventional. So we are in conventional grocery. That has been another kind of thing I didn't expect, was that natural channel sees us as a charcuterie only item and a deli placement.
Interesting.
But we've done the testing for years that, like, we'll move 4 units in the deli and we'll move 50 plus in the produce department. Plus, for a seasonally harvested item with variable weight and variable pricing, like, we are a commodity. I am at the whim of global honey prices, just like avocados and berries. Like, prices change daily based on weather, based on production, based on volume. And we have to plan, a year in advance for the annual harvest, because that's when people forget that bees have to pollinate flowers during the spring to store the honey for the winter. And we take it right before the winter. We can only take so much. Otherwise, the hives won't survive the winter. So we have to be very cautious and intentional with how we harvest.
It's noble work, though, for sure. I mean,
Sure.
I think I saw you post something on LinkedIn a week or two ago about how big a drop there was in the honey, not the honey hives is the right term to use, but
Colonies, yeah.
that's something I've known this is a big issue, but it doesn't seem like people really understand how big of a concern,
Yeah, I mean,
dwindling
60%.
bee populations are.
60% of colonies were lost last year. Could you imagine if the cattle industry lost 60% of all cattle or poultry? Like, people would be bonkers. And maybe it's because it's an insect. Like, oh, they don't live very long. They're insects. But, like, it takes 1 year to 3 years to get a hive up and producing, like, strong. So if you're a beekeeper, like, the economics are just getting worse and worse. You can't sell the liquid honey because all the fraudulent imports have driven the price so low that you can't be competitive in the market with real honey anymore. So you're basically forced to pollinate monocrops, which is horrible for the bees, but vital to our food system. Yeah, it's a lot. And I don't know. I hope we play a role. I hope, I don't think it's an unlock per se, because we still need beekeepers to be pollinating monocrops, because that's how our food system in America is built. I don't see that changing for a while.
Right.
So, like, how do you navigate that while keeping beekeepers solvent, and bees healthy? Our regenerative outcomes, which is the only outcomes-based methodology I'm aware of in regenerative that's in market, and that's honeybee health, beekeeper livelihoods, and ecological diversity. And we test and measure. So that's our tack.
In terms of the honey market today, obviously, as you mentioned, this adulteration and essentially honey fraud is a big thing. I'm just curious, like, how did we get here? Has this been like a widespread issue for decades, or is this like a new thing that maybe is regulations changed and nefarious actors realize regs are relaxed, or has this been going on for decades and it's just something that people have kind of not known about, or I guess accepted for the people that didn't know about it?
It's been going on for decades. Consumer demand for honey has increased annually, year over year. Production in America has declined year over year. That delta is filled with fraudulent imports. If you were to go back to time, my wife is but she's the honey archaeologist in the house. She can tell you all kinds of good stuff, juicy details about the origin of honey and beekeeping and its role in agriculture. But industrialization, for one, mechanization, is one, because that's when the heating, the blending, and the jarring, I think, once you get those processes in place, they can be fudged. But, like, where consumer demand jumped for honeycomb, you could trace that back to the teddy bear, which was, one beekeeping organization that just, like, made it cute. I think that was an inflection point of consumption. And then, as of the last decade or two, perhaps, for sure the last decade, you got a lot of better for you brands touting honey as a healthy sugar, but they're also using fraudulent imports. So they're, like, pushing the demand up while also supporting the fraudulent actors which is just a recipe for shit.
Yeah.
So yeah, there's a lot of, big CPG companies touting honey, but then when you test their honey, it's essentially sugar water that's been flavored like honey. It's not, there's no pollen source, there's no nutritional benefits. Honey's incredibly nutrient dense. You could survive off it. I think it's a whole food, actually. But yet, what we're getting in a jar typically is not that. It's, you can have a candy bar, man.
You buy it in a jar or tube and it says organic honey. Does that mean that it's real honey, or is that even still fraudulent?
There are no organic standards for honey because you cannot fence or feed a bee. Organic is about inputs. So yeah, the USDA says literally in the National Organic Program, like the guidebook, right? The standards and practices. It says there are no organics practice standards for apiculture, which is beekeeping. It's one line and it's very clear. If you ask the USDA, the answer is no. You have certifying bodies that'll certify it under livestock standards because they can charge $1 for it, is my guess. Some of the more authentic certifiers are stepping away from honey, knowing it doesn't fit the rubric. It doesn't fit the NOP. You can try to adjust it. There's been guidance that's been suggested for 15 years at the USDA on how to actually have an organic standard for honey, but it's been deemed not a priority for 15 years. And we just applied for another grant last year, and we were told pollinators are not a priority, which is where private companies have to take the mantle. Like, we're going to take the torch.
Yeah.
It's harder, sucks. Sometimes it's very costly, but someone's got to do it. And I'm going to say it's almost pathetic that a company our size is the one that has to fight this fight. But people will turn. I'm confident that eventually word will get out and people will, start. Like, we're already selling our liquid honey from like our excess from our cutting operations to other CPG brands that are looking for that like full transparency and testing. Like, we can stand behind our honey.
Yeah.
Other people can say a lot of things, but
Sure. How do we eliminate honey fraud? And I think I know what the answer is going to be here, but can we count on the government to help at all? Or is this going to have to be just driven by the industry?
administrations change.
True. Yeah.
And there are wild swings. Don't have much hope for current administration on any sort of agriculture that isn't like major stock, like your major commodities. Even in previous administrations, it was deemed not a priority. So I don't know. We are actively through that. That's why we have the 501c3. It is foundational. It is private donors. It is our own research, but we enroll the entire industry, the apiculture industry. Yeah, it's a lead by example. I hope that there will be some sort of government intervention, maybe on imports of fraud or testing parameters, or even labeling, like not allowing organic, like giving an exclusion because it doesn't fit the rubric. But we've looked at a couple different tacks of ways we could potentially lobby. I don't see a direct path yet.
It sounds like the more players in the space that are doing it the right way have a similar viewpoint to you, the better. For aspiring founders that want to start up, a honey brand of some sort that is, offering real honey in a similar track that you guys are, how should they get started? How should they think about building a brand in this space? And, what's actually going to be key to get on retail shelves like you guys have had so much success with so far?
I would suggest joining the Regenerative Apiculture Working Group, which is the P3, participating in the development of the standards, practices, and testing, like being active in that small but mighty group that is looking for change. And then when you're looking for sources, qualify them through those qualifications and test. Like, we have to use nuclear magnetic resonance testing. We look for any sort of contamination, pesticides, things of that nature, antibiotics, to the parts per billion, which is 1,000 times more than the NOP. We also look for sugar water feeding, which is another form of adulteration. We do a pollen analysis to validate it's from the regions that we've qualified. We do a forensic on-the-ground audit with beekeepers to verify that they're getting paid fair wages. Yeah, I think. Oh, and then we're developing the ecological side. Like, that is still, how do more bees positively or negatively impact the ecosystem with native pollinators, but also with forage, like more bees, more flowers, right? Like, that happens. So we are working with a group that's developing what our testing protocols are around that.
Moving beyond the honey space specifically, you just have so much experience in this food and beverage space in general. Just talking about building brands in this space, in general. I think one thing I noticed in your book, you talk about like a series of make or break decision points that most founders are presented with along the way of building the brand that can really ultimately make or break their business. So I'm curious, in your mind, what are the most perilous decision points where the majority of trip ups happen, and how can founders maybe approach these to avoid falling into the abyss, one might say?
There's 1,000 ways to skin a cat, right? And I don't believe there's any right way or wrong way, which is why that book is a choose your own adventure. Like it's not, there is no mandate. The only way to build a CPG brand, like kick rocks. The one thing that I tend to fall back on though is founders need to be really clear on their outcome. What do they want? Just because, let's say you're in a probiotic soda or a healthy soda, just because your competitors raised a ton of money does not mean you have to raise a ton of money. Like they may have a different outcome. Like when you take venture money, your outcome typically becomes binary. It's either sold or be bankrupted or written off. When you choose a different path, and maybe that's starting at farmers markets, way different business. Maybe you get personal joy interacting with people for that long every day. I don't, but other people do. Those real clear moments do. If you're a founder starting a CPG company, you're in the middle of it, or like you're a couple of years in, take a weekend, go somewhere you feel really comfortable, and just clear the space. Like get the noise out of your head. If you like to skydive, go skydive. If you like to ride motorcycles, ride motorcycles. If you like to go read a book in a coffee shop, do that. If you like to go to Disneyland, like go to your happy place, wherever that is, and do whatever your happy activities are, and let your brain just decompress. And then ask yourself the questions like, what am I doing this for? Is this because I think there's a huge opportunity in the market to be the next Coca-Cola, and I'm the person to drive that? Or am I looking to put my kids through college and have a nice home and a nice life? Like people, pardon my French, people shit on lifestyle businesses, but those are some of the happiest people I've ever met. So, lifestyle business can be anything from, a couple 100,000 to several 100 million, billions perhaps, who knows? But I know people that have lifestyle businesses that are in the $300 million range. Like that's a real business, but it's the philosophy behind it. They're small teams. It's not managing global enterprises. It's just, they keep it lean, they keep it tight, and they do the same thing really good over and over again, which maybe is boring to some people. It's that getting clear on what you want out of life, before anything else. If you have a marker that says, I want to make $10 million before I die, I would not go raise venture capital money. That's a hard way to get $10 million. Go have a company that sells $3 million a year and do it over, 5 years. And there you go. You're good. So yeah, there's different paths. And I don't see a lot of people. There's so much FOMO and so much noise on LinkedIn of, store counts and new store launches and new SKU iterations and new flavors and new fundraising rounds. Okay, how's your P&L? How's your balance sheet? Are you stressed at night because you have 30 people sweating you? The venture world and the venture-backed companies, timing the market it's impossible. It could shift in a day.
Yeah.
That's the part that just is scary. So I don't know. I prefer optionality, which is, a profitable company, healthy margins consistently, and not try to do too much. Do less is really my mandate for me personally. Because otherwise I get overwhelmed. I don't get good. I start to get ratchety. My wife doesn't like it. I don't like it. Dogs don't like it. So yeah, but it's to each their own, man. That's a long-winded answer of saying, figure it out yourself.
Yeah, it makes sense. Maybe more specifically, you might say a similar thing, depending on what your situation is. But with the, I don't know, current market environment, I guess I'm mainly referring to all these tariffs that are happening, and just seems like more economic uncertainty for founders that are kind of in the thick of it or early in building their brands. Any feel like new kind of these similar make or break decisions that are coming to play for them that they're going to have to keep in mind, or will be facing now, or maybe facing in the not so distant future? And any thoughts about how they can best invest?
It sucks right now. That is to see prices, not just the tariffs, but the ripple effect of large buyers moving supply chains to smaller countries that don't have tariffs and jacking the price up because now demand is increased. It might be the tariff for one thing, but coconut sugar, I heard that went up 4x overnight, and it wasn't from tariffs. It was from the buying shift to other lower tariff regions driving the price up in those countries. I don't know how you get through that. But I am confident that things do change. Like, administrations come and go. And this was, this was a piece of paper that somebody signed their name on. Like, I don't, is it governance? Is it legislative? No, it's not yet. It's like, it's decree. And I don't know how long decree lasts. So I've heard daily, this is across just because I have a bunch of friends that own companies in different industries. Daily, someone is either shutting down for a period of time or shutting down completely. Like, just can't, like, not worth it anymore. And that's tough. That's a really tough call to just get hit with something that, but in CPG in the last few years, we got hit with COVID. We got hit with the iOS changes for all those D2C brands. And now the tariffs. It's like, if you can live through this, man, shit, I feel like you can live through a lot. It seemed like it was less chaotic, 10 years ago. But maybe it wasn't. I wasn't, at a mature company yet. So
Sure.
There's always something, man.
There's always something. I was about to say, there's always something.
Sometimes they're bigger than others.
Yes. For a few things I think about when looking at an earlier stage CPG investment, sometimes the things that I think about are including, like, obviously, does the product taste amazing? Is the overall product experience really, really good? Two, does the brand have a clear place on the shelf? Is it clear, like, what aisle or section it's going to slot into? Like, if the buyer says, I don't know what to do with this, it's probably more challenging. Seems like velocity is a big thing. Curious from your perspective, when you're thinking back in your investor hat days, or maybe still to this day, what does your checklist look like, and what are, like, the most important items on your list?
Checklist has evolved. There was a checklist before. I wouldn't say there is one now. Companies are so young at the venture stage. Like, it's a total crapshoot. Like, I don't think you can really tell. Maybe the founder, like, it's the team, people say, but some of the biggest wins were total anomalies. They were things that didn't fit in the store at a right place. They were things that weren't being done. They were things that were considered dumb or weird or never would sell. I think part of the ills that hit the industry was all the venture money, which I participated in, which is also the catalyst for me getting out of venture and CPG, is that too much money, too many iterative bullshit brands coming out, like, with no real differentiation. Like, I don't know. It was like, things got real crowded in the store. And then everyone was fighting for shelf space, which drove prices up. Of if it was slotting fees, getting spent, everyone was flooding Facebook and Instagram with ads, and those got expensive, which caused you to raise more money. So, I mean, look at us. I sell pre-portioned honeycomb. Like, it doesn't have any spot in the store. We're told it goes in honey because it's honey, but it's not. It's like putting the berries with the jam. Like, we're a cut, seasonally harvested item, and liquid honey is highly processed. So we took, years trying to figure it out, where in the store we moved most. And we get pushbacks till this day with retailers, like, well, we don't want to dump it on the floor. It's like, well, how do you sell your wonderful pistachios? Well, that's a dump in. Well, then you have dump ins on the floor. Like, what are you talking about? But then you get groups like Kroger that, their master stroke was putting 2 dump ins on the floor next to each other. And they are ripping units. I mentioned earlier, before they started recording, like 50 to 70 units a week at $5.99, like, consistently, is insane numbers for an item that's not being heavily promoted, not being put on end caps, not being heavily marketed. Like, we don't have a marketing budget. Like, we just kind of, like, hope for the best with the dump bin on the floor. That'll change, but, like, we're a young company that's cash strapped and growing fast. Like, that further straps our cash. So, your question of, like, I would probably try to find the ones that didn't fit anywhere in the store that seemed super weird. Like, I tried to fund a seaweed snack company with some of our limited partners in one of our deals. And they were all from Houston. They were a bunch of oil guys. And they just laughed me out of the room. Seaweed, who's going to eat seaweed? I was like, my God, man. Like, it's niche enough to, like, win some dollars and, like, carry a premium and a margin. You start getting into these crazy cluttered categories, and goodbye contribution margin. Like, you have to outmarket, Perfect Bar and Kind Bar and Kellogg's with RX Bar. Like, I don't want to fight those fights.
Great point.
And then, like, also, like, price point. Like, people forget the Siete. I think Siete started at $2 a tortilla. It was like a crazy expensive tortilla, and it was also fresh. It wasn't like in the end cap. It was like in the cooler. Like, that's not where people were shopping for tortillas. But, like, they had their fundamentals in place, and they scored a massive, awesome investment for the family and the win, and just recently exited. But, like, that didn't fit anywhere. A healthy tortilla, like, if you're a total pessimist Like Hispanics aren't buying healthy tortillas, is what you would say. But it's like, oh, maybe they are. Maybe other people want a healthy tortilla. Like, never thought of that. So yeah, checklists be damned. They say riches are in the niches, right? Like, find those. Like, but find something that has like some like solid assumptions behind it. Like, we had some strong assumptions going in. Like, we thought that honeycomb hit some trends. We thought that making convenient would sell more, and we built for scale. And so that had some merit. We're not just selling to your mom and pop local retailers. Like, we can support a Kroger and Albertsons, a to be named natural retailer in the South. So yeah, that's different. And I came at it a little differently. So maybe that's why we were able to raise money in friends and family. Like, I didn't have cash to pioneer a new category and create a new commodity. So we did raise some money, but it was on favorable terms to us, and our investors are patient and they all looking for distributions at a certain point. Like, I don't intend to sell the company. So that goes back to like, what did I want out of this, right? Like, I want to have fun. I want to do things I like. Like, this is enjoyable. Not without
Totally.
hard days, but
Fun hard days. The fun hard.
yeah, there's a reason we do it, right? So like, that's the other thing. We're just in it to make a buck, and you have this like weird, you know, green grass, New York shrub grass water company. Like, come on. I'm making up names as I'm looking out the window. But that's where we kind of got for a while there. It was just these kind of like weird iterative things that, like, just because you can do it doesn't mean you should do it.
Yeah. How do you think about, I often talk to founders and more seasoned operators, and there's always this balance, and some investors I talk to, there's always this balance between focusing on velocity and how fast the product's moving on the shelf versus expanding into, as many retail distribution points as you can. I'm curious how you think about that balance, and you have a similar mindset in terms of, you feel like velocity is more important and only focus on expanding your distribution points when you feel like the velocity is, at a high and stable level, or is it kind of a case by case basis?
I think the common dogma of velocities before store expansion is appropriate in more established categories where there are things like category reviews and defined sets. I could see why that makes sense there. I've never had to live through it, so I'm not an expert. I'm not by no means. So like, we Kroger aside, we still move very well, like everywhere, like 24 plus units a week in most stores. Like the low end, it's like 6 or 10, which is still high for a CPG item. But we have a much higher margin, like profit for the retailers. And when you start telling the profit story for us, that was difficult because produce looks at sell-through percentages. Like, we get a case of oranges in, they have to sell 70 to 80% of that within a week. Otherwise they go bad and they can't sell them. So like, their whole model and how they look at their category is ranked by sell-through percentage. And here we have a 96 count bin. So like, in the beginning, we were selling through 30, 40% in the first week or two. And we were at the bottom of their like ranking for their items, and they didn't like us. And it's like, whoa. Look at the profit you're making. Like, you're making $3 profit on every ring. Like, you're not getting that on an orange.
Right.
So that was something that, yes, I love unit velocity. The more, the merrier, right? Don't get me wrong. But because we have a price point and a perceived value in the market by the consumer and a profit profile for the retailer, we don't have to sell as much. And because we're a totally new category for produce, like a new item, we're incremental. Like, we are 100% incremental. We're not pinching a berry sale. We're not pinching a salad sale. We are purely 100% incremental income to, a retailer in produce. So our story is a little different, but we do fight that story of like sell through. Like, it's like, hey, don't look at this at this level. Look at this as a P&L. Like, and right now, thank goodness, retailers are starting to look at profit more than, sell through. Like, dollars keep the lights on, margin doesn't. So we wiggle on margin. They have their, produce has their 45s they want. It's like, well, we don't expire. So do you really need a 45? Because you don't have spoilage. And that's been a negotiation over years. And you get a retailer that gets it and it moves. Like, that's us right now with Kroger. And it started with Albertsons. Like, Albertsons, Safeway, and NorCal was the first one to really say, this is something interesting and let's do it. And they committed the time and the space and the dollars, meaning like they took our advice on price. A lot of people don't, and they don't see the same results. And we have to come back to them and say, why don't you try this? Like we talked about. So yeah, that's, I don't know. I think, yeah, back to answer your question. Depends on the category, depends on the item.
Yeah. That makes sense. You mentioned P&Ls on that similar track. When it comes, I just read a bit about some of the stuff you mentioned in your book. And when it comes to projecting COGS and margins, what are like the most common ways that operators get this wrong? And I assume it's mostly undershooting, but yeah, what are the most common ways that founders get tripped up on this piece?
The belief that you're going to make up margin in volume, like it doesn't happen that quick. Like you'll never get there half the time, right? Like it may take yes, you could make up margin in volume, but like, are you going to get to the $10 million to do so? You might not want to reconsider your COGS. And that's what I highly suggest people is a lot of folks do bottoms up modeling. Like it costs us this much. We're going to charge as much. We want this much margin for, and now people are starting to think, oh, marketing dollars and contribution margin is the new buzz term versus gross margin, which it was, 5 years ago. But for us, because we work in perceived value, nobody has a preconceived notion of what their honeycomb costs. We're not an egg or, beef. So we work off perceived value. And when we started price testing, we found that our sweet spot for consumers is $6.99 and $7.99. And anything below that doesn't move as well. So we price off that. And yeah, with that, we also we're allowed to, because we do have now the margin, we're able to plow back into the supply chain. Those dollars are put to work. They're not just put in a pocket somewhere.
Sure.
But that's what allows us to sustain and maybe weather some storms. And did I do it right? Did I luck out? Like we tried to price this thing lower in the beginning and just didn't sell. I thought I had a total dud. There's an adage I've heard since that says if it doesn't sell, double the price. And sure shit, man, it seems to work. But yeah, we don't go like too high. Like I'm not aggressive. I'm not a Louis Vuitton. But yeah, that's so yeah, I would say it's more about like really see what the consumer's willingness to pay is. Like do a top down pricing, not a bottoms up, or do both. See where they land. If they're close, great. If they're not, then have some conversations.
On a bit of a similar track in terms of like managing margins, selling into retail, it seems like the more and more, not only of retail outlets that you get into, but the different retailers, actually entities that you're working with, it seems like the more like one-off requests a brand may get from retailers, whether it's like, Costco wants a special SKU or pack size, or I don't know, Walmart or Target or something, they want to do some retail specific media and ads. How do you think about brands balancing the need to go above and beyond for those retailers and acknowledging and acting on some of those one-off requests versus, I think, the more and more that you do, obviously that impacts, budgets and resources. How do you kind of maintain that, trying to go above and beyond versus maintaining margins, if that question makes sense?
Retailer specific. I mean, we get a lot of random requests from a lot of like smaller operators. And no, I'm not creating a new bin for you for your 30 stores. I'm sorry. And those are also the ones that are most likely to pain in the asses down the line, that don't want to pay on payment terms, don't want to buy to minimums. Like, no. But like a Costco's known to be incredibly good to work with. Like, and I think you want a special SKU in Costco. Like that's their thing. And they've proven their model works over and over again. So, and Walmart to that degree too, like big enough buyers, there's wisdom. Like they know their categories. They may not know specifics. Like for us, it's a little weird because like no one's really selling honeycomb to our levels. So we become the expert. But when it comes to like pack sizes and configurations and where it fits in the store, our biggest wins have been because retailers have asked us for something. Like our dump bin came from a request from Northern California Safeway. And like our refill program, like the actual case count and refill count was directed by the retailer. And that's been a huge unlock for us. Kroger, like I said, their master stroke. We've had retailers put 2 bins in the department, but Kroger put them together. And like, I thought that was a weird look, but man, the numbers don't lie. Like now we should put bins together. Like, so there's certain things like that are easy wins that are just best practices. But yeah, it's no secret that your smaller accounts are typically the ones that are the most noisy.
Yeah.
We don't have venture money behind us, so I don't have to take, shitty business. I don't need to get doors. It allows us some flexibility on who we choose to work with. And we've recently just started cutting accounts. Like, sorry, like if you can't buy minimums, you can't pay shipping. Like I will ship you a pallet, cost loaded in, But if you want 3 cases, I'm not eating shipping on that.
Right.
And you're not going to pay me in like 30 days. You're going to pay me in 60. Like, no, like, why am I working with you?
Right.
So maybe that's a shitty mentality. I don't know. But I mentioned earlier, like, I just try to do less, man. I don't have that pressure of like exit, exit, exit. We're profitable as of like last month. So we've been profitable a month in that. But the Kroger, it was a domino that for us was like, I think it's also a signal to the rest of the industry, like, okay, this thing works. Like a major retailer put a major program together and it's moving major dollars. But now we can't support. If everybody wanted it tomorrow, we couldn't do it. So
Right.
we have to obviously still manage the cash flow. We have to manage our growth and we have to manage our suppliers to make sure we're harvesting enough and getting our allocation for next year together enough. So we're not paying through the nose, May, June, July next year when the seasons, comb supplies are dwindled and cost is going up.
Yeah, you're able to control your destiny a lot more, and you can kind of make decisions based on what feels best rather than always having to have hyper growth always at the top of mind.
Yeah, it's just different. And
It's
that's
a
a
lot more
pro
flexible.
con. But I would love to have an extra $1 million sitting in the bank. That would be like, yeah, but so what's the trade-off? Not enough for me. Not enough.
Any brands, any brands or trends, or categories across just the CPG food and beverage space in general that you're particularly excited about?
I'll give a shout out to Ari Raz at Coconut Cult and Noah. I mean, my wife has a text thread with like 4 other women that when they see Coconut Cult hit the stores here locally, they buy all of them and then they like distribute it in like a black market backroom deal. Like I've never seen anything like that in my life. And they're delicious and like they're just good people doing good work. So like that, if I can think of any one part of the category that's like just kind of like stand out, that for sure comes to mind. Solely I love their dried mangoes, but that's just from everything I see, and I don't know much. It just looks like they have their fundamentals in place. But again, I don't know what's on the inside, but I don't see them shouting from the mountaintop every time they get something, which is an indicator of something. Do see them a lot of places, so like slow and steady.
Yeah, totally.
And then our North
Yeah.
Stars are really brands like Driscoll's and like avocados from Mexico. Like we've really kind of taken a lot more inspiration from the how do you market a commodity? Because when I started this, my CPG brain went like customer demographic, benefits, uses, like all that shit.
Yeah.
Which we can't make any claims because we're a commodity. Like we're made by an insect. Like I can't say how much zinc or vitamin this or vitamin that or glucose is in. It depends on the comb. Just like you can't say how much vitamin C is in an orange, right? And then like if you're a commodity, like who's the audience for a banana? What's the uses for a banana? Like they're so broad, and we fit in the same category that it's a blessing and a curse at the same time because people don't know what honeycomb is, they don't know how to use it. But the avocado 20 years ago, nobody knew what it was. It was really expensive. They didn't know how to use it. So we have a very similar trajectory of like the avocado I see.
Yeah, that makes a lot of sense.
Yeah. So that's where fresh is the category I'm most interested in the store right now.
Yeah, I love that. Well, yeah, Douglas, this has been really awesome. I think you shared a lot of really valuable info. Anything else you feel like you want to share?
No, man, I appreciate the interview. It's covered a lot of topics, which is good. Usually interviews stay in the lane, but I like
For sure.
bringing a lot of my experience as minimal or maximal as it may be in different areas to the table. So thank you for that.
Yeah, it's been great.
If anybody's listening, go ask your retailer, why don't they have honeycomb?
Yeah, that's for sure. I was about to ask, where can people find you and also follow along the company as well?
We don't do a lot of activity on Instagram and social media. I'm probably most active on LinkedIn.
Okay.
So that's that. People can always hit me up there or just Douglas at honeyfeelbetter.com. They can buy it at freshhoneycomb.com. But really, Albertsons, Kroger banners, man, Sprouts. Just go into the store and ask them for it. If it's not there, it can get there because we have codes.
For sure.
Cool.
Awesome, Douglas. We appreciate it.